Let's welcome on board Naresh. We've got Dhananjay Sinha and Kunal Bothra as well joining in. Naresh, hi, afternoon. Let me come to you. What is today's consolidation telling you? Are we gearing up for a move forward at all?
So at least the pause is the first decent indication because we've not seen any volatility today in any of the indices. We are flat across the board. So let us see if we see further price action. So watching out 20 to 800 now becomes that pivot point. If we sustain above that, we get into a reversal.
Right, so that's the talk about what the markets are doing at this point in time. Kunal, let me come to you and let's talk about metal sector, because given the fact that this one is one of the top sectoral losers in trade today, and one of the reasons why that this sector is under pressure is the fact that the US is another salvo coming in on China, and the fact that them talking about curbing investment in Chinese companies, and that's not boding well for the entire metal pack as well. But what's your take coming in the metals? How should one actually play this theme, and if at all, one should actually play this theme?
I think there should be a decent merit of playing this on the long side with a long bias. Now, for example, many of the stocks like JSW Steel, Tata Steel, then you have Hindalco, Jindal Steel and Sale. I think many of these stocks which have been more formidable in the recent last 2-3 weeks approximately. What has happened is that many of these stocks have upped their support, and they've moved up higher by a margin of 10%. I think Tata Steel is up some 20% from its recent swing lows around the 110 mark to 135, 140 plus levels, where the stock has been trading right now. So which means that what we are looking, is that these stocks have managed to digest a lot of negative news flow and then managed to move up higher slowly and gradually. Now on the way up also, I think it's not going to be an easy task or a vertical rise for these names. But then eventually I think there comes a point where the risk reward starts to look very attractive, because you know that the slew of news flow is not leading to any major negative price action for these stocks. And then when we look at the relative strength scale, we look at the last, I think 10-15 days of time frame for the index with respect to the relative sector strength, metal stocks have done reasonably well, and they still stand out to be one of the top performers in terms of the relative strength scale. So I think on all of these aspects and the individual stocks, make sense to hold on to these metal names as well as look out for buy on dips.
Dhananjay, hi, afternoon. What is your reading on the market? Beginning to nibble into large caps just yet? And what is it that you're doing with small and mid caps? Steer clear, is that the advice?
I mean, there are a lot of negatives that has been playing out, be it the dollar index, which is strengthening the U.S. Protectionism and whatever sanction is trying to impose on various countries, etc. I think that has created a kind of a upheaval in the markets, and also our results hadn't been too heartening. So I think all these things have translated into a significant erosion in market capitalization. I would say roughly about 78 lakh crores worth of 76, 78 lakh crores worth of market cap erosion has happened if you look at the overall. I think, in terms of valuation, the market appears to be, at least the benchmark indices appear to be, trending towards a more sane levels. So if you look at Nifty, is about 20 times, so does look to be lower than last 10-year average or thereabout. So I think the market is trying to look at some value pick at this juncture. I think it is very tentative because there can be a second order impact of the losses that has happened, especially in terms of the retail flows, the impact of that on the collateral values of various bank exposure that may or lender exposure that may be happening. So I think we need to be careful about it rather than every day there can be some change in momentum. But I would say it would take about 3 to 4 months time before things get clearer in terms of global factors and domestic earning cycles. So I think all those things will need to be seen. I think RBI has cut rates, government has cut income tax, etc. Our view is that these are very small stimulus. I think those will not be very meaningful in terms of revival in the overall growth story. So I would think more of that will happen. So I think it will take about, in total, in nutshell, I would say about 3 or 4 months time before things get clearer. In the meanwhile, I would say there are certain stocks and sectors that are actually resilient. I would say large caps are generally better. And I think what is happening also is that within the banking sector is outperforming. That's largely because, I mean, Ironically, that has become a defensive sector because it has not really, a lot of these heavyweights have not performed in the last 5 years. Hence, the valuations are very low, and people think that's a hiding place. I mean, earlier on, FMCG and all IT, etc., was seen as defensive. We have seen significant battering there. Likewise, in metals, I would say metal is heavily cyclical, whereas people that has actually outperformed. So I think people are looking for a more resilient sort of sectors or stocks, etc. I would say that I would still be careful and be very careful about which stock that one can actually pick up. So I would say, if I look at beyond 3 months' time, I think more and more stimulus will be available from domestic stories. It would impact more consumption, rural-oriented stimulus might come. I think these are things that we are sort of imagining over the next 6 to 12 months' time, on which government might actually act, and RBI may also act more aggressively. So I think I'll pick up value in such sectors, in consumption, in autos, and related sectors is what I think can be looked at.
Right. Dhananjay, good afternoon. Cheryl also joining in the conversation. And you did mention there are a lot of sectors that look good. There are a lot of sectors that may not look good, given the fact that you need to be very picky and choosy in this sort of a market. Large caps looks very attractive. But there
Sure.
are a lot of people on the sidelines who are very much risk takers. Do you think it's time to be risky? Look at the SMIDs, given the fact that there has been a sizable correction, and now you would feel a bit, greedy, and you would feel that entire space looks very enticing.
Yeah, so the thing is, I would say that the uncertainty factors are still looming large, and I would say it will be a little hasty to really jump in right away because things are evolving, and as I said, it will take about 3 to 4 months' time to see things settle down. And if you look at the sensitivity of the benchmark index with a SMID index, I think that or a SMID sector has an elasticity of almost like 2 times. So if there is a 10% correction in the index, benchmark index, there is 20% correction in the small cap. I think important thing for the SMID sector is the flow and the retail participation. If you look at it, the kind of erosion that has happened, let's say that's about 78 lakh crores, that's almost like 30% of household income. And if I look at really guys who are actually exposed to the mid and small cap, those will be even smaller. So the concern that I have is that if there is a sort of a negative return for a sustainable period, the flows might actually start to diminish. So I think that makes the sector far more vulnerable. So of course, if there is a big correction that has happened, very adverse sentiment that is there, you can have few days of rebound as well. And there are a lot of stocks that have corrected a lot. There can be some temporary rebound, but I would say we need to be very careful. I would say over here also we are finding some pockets where there are a resilience in terms of stocks and stuff. So we need to be choosy there. But by and large, I would say I would not really go whole hog in this space.
Interesting. Okay, let's look at some of the other movers then today. M&M, of course, is the one which is sort of leading the pack right now. There's Maruti as well, which has been seeing some buying. Dhananjay, a lot of time has passed since that slowdown in the monthly sales data for Motown translated, right? We all know the EV strategy, the global exposure, which most of these PVs at least have. Wanted to understand where is it that you think there is, merit in buying afresh or adding to the existing positions within the passenger vehicle makers? Because, I think the market has given its clear verdict wherein M&M is taking the top slot and Tata Motors is pretty much out of favor.
Yeah. So I think what we have seen in the passenger vehicle segment is that over the last, I would say, 3 or 4 years, there has been a significant premiumization driven margin expansion that has happened. I think the EBITDA margins for several passenger vehicle companies are at a all-time high or near all-time high. There is some shrinkage that has happened, but they're near all-time high. So I think going forward, why some of these names are losing interest is because the premiumization story may have actually gone off. I think that has peaked out, and as a result of that, the multiple expansion that was happening because of the higher average price of the vehicles sold, the expansion that had happened almost like 150 to 100% increase in the average sales price was happening when we moved from the entry level cars to the SUV level cars. That was one. There was huge amount of inflow of credit that was also happening. And I think the loan to value ratio is also rising. So multiple things are adding on in terms of the margin expansion and the operating leverage. That is actually peaking out. So I would say the average selling price for the premium vehicles might actually come off, because if you look at the urban sector, there has been a slackening in terms of the overall salary growth. If you look at the compensation and salary of the non-finance companies, if you look at, I just looked at the data a little while ago, it has come down to about 2 or 3%. So there is a considerable amount of slowdown that has happened there, and I would say the credit side could also tighten. So I would say, hence, the premiumization part might actually take a hit, especially for companies such as M&M, which has got a very high end kind of vehicles. I mean, of course, the tractor is attractive, but tractor component is attractive, but the SUV part, but actually see a certain amount of slackening. Hyundai Motors, for instance, also has a very high premium segment. I would say Maruti is somewhat better because it has got still about 60% market share in the entry level cars, and the stock hasn't done much in terms of performance. So I think that stock looks to be better. So basically, the other aspect to really look at is the reduction in the steel prices that has been happening, and we've seen margin expansion happening on the cost from the cost side in the third quarter results as well. So I think it could pan out as we go forward. So I think Maruti definitely looks better, I would say, relative to other passenger vehicles. And of course, I like two wheelers because you have a sort of an income tax rebate that's been given, so there might be some leverage that can happen because of that, and also that next year you will have a pay commission, which can actually add to the sort of demand for the government employees. So I think over there also, I would say something like a uh, uh, Bajaj Auto or Maruti, TVS, those kind of stuff can actually do better. So I think I'm closely looking at the premiumization story, the cost aspect, the leverage aspect, and the income effects that can happen from the tax break and also the pay commission thing that would happen next year.
Premiumization has to be a key theme when you talk about it, when you actually step into H2 of 2025 in particular. But on that note, we slip into a break on this edition of Closing Trades. A lot more about markets on the other side. Don't go anywhere. Look at the markets, they're doing absolutely nothing, trading flat with the positive bias. With the Nifty Bank in the negative territory, the advanced decline ratio from morning has tilted a tad bit in the favor of the declines. But Kunal, looks like today is a day that you cannot complain given the fact the way how the markets have moved, and no move is a good news sort of a thing for the markets right now.
Yeah, sideways is a good day for the markets, especially with the kind of carnage we've already seen the last many days, many weeks for the indices. But that still doesn't indicate or infer that the markets have come out of their selling spree and we are looking at an immediate revival. In fact, today also, even with the indices being absolutely sideways, we've not been able to break past above even the yesterday's high for the Nifty on the spot level. So I believe that this could just about be the adjustments, the volatility or the rollover positions which generally happen due to the expiry. But if we break past about a series of maybe 1 or 2 days of swing high resistances, that's where we can establish that the market mood is getting a lot more better. Also, I think today we have not seen any major comeback from large cap names either in terms of sectors also. So that's another reason why you're seeing the market activity a lot more dull than what it was maybe last couple of weeks.
Bunch of other names which are in focus. For Bharti, of course, there's been a note from Goldman Sachs. They've maintained a buy with the target price, which is indicating a 5% upside. 1780 is the target price that they've set on this one. Bharti, of course, is partnered now with Ericsson 5G core technology to drive their 5G evolution forward. There's 361 WAM, that stock holding up very smartly. Citi has maintained a buy with a target price of 1275. They're expecting that equity broking is going to grow at 15 to 20% over the next next 2 to 3 years, and they've retained their net recurring flow guidance at about 35,000 to 40,000 crore rupees. Dhananjay, you think the entire capital market theme, which has worked very well the past 2 years, will it continue to do so after this recent bout of correction in equities?
So I think this is a structural story. I would say, you might have a sort of a correction that has been there, but I think this whole, the market-oriented stocks are actually doing reasonably well with higher financialization and retail participation that's been there. So you might have bouts of, market going up and down, but I think by and large, I would say the participation of the financialization of the of rural of retail investors in the market. I think that's a story that can continue. So I think that is a kind of a structural story that I would bet for.
Right, so that's the take coming in from Dhananjay on that note. Thank you so much, Dhananjay, for joining
you.
us on ET Now to talk about the sectors that are looking attractive, be it the large caps or the SMIDs, and also giving us an extensive view when you talk about the metal space. But on that note, we slip into a break on this edition of Closing Trades with the markets trading absolutely flat as we speak. Let's wait and watch out what happens in the next 30 minutes of the trade.